So you're thinking about moving to Las Vegas, Nevada, and you want to buy a home, but you're not sure if you're ready to do so? Well, then this video is for you. That's because we're going to discuss 7 signs that you're not ready to buy a home. And towards the end of this video, I will share with you what I think is the most important one of them all. So let's get after it right now. Hi, my name is Mark Pepe, and I absolutely love helping people discover all things Las Vegas, including the Las Vegas real estate market. If this is the type of content that resonates with you, make sure you subscribe here below and tap the bell for notifications, so you can be the first to learn about the current market here in Las Vegas, with so much evolving almost daily. We are passionate about removing the stress of relocating to a completely new city and state. If you're thinking about making that move, whether it be 9 days or 9 months, feel free to give us a call, text, or email. All that information is in the description below. You know, purchasing a home in Las Vegas, or any other city for that matter, is one of the most significant financial decisions you're ever gonna make. While it's often associated with stability and investment, homeownership comes with responsibilities that extend far beyond the initial down payment. Being unprepared can lead to financial strain, emotional stress, and long-term regret. So, without further ado, here are 7 signs that indicate you might not be ready to buy a home yet. Number 1 is a lack of stable income. A steady and reliable income is the foundation of homeownership. Without it, meeting mortgage payments, property taxes, maintenance costs, and unforeseen expenses becomes a daunting task. Here's why financial stability is crucial. First, you have mortgage approval challenges. Lenders assess your income stability with determining your eligibility for a loan. Inconsistent earnings, such as those from freelance work or commission-based jobs, may make securing a favorable mortgage rate a little bit more challenging. Then there's the financial stress. If you lack stable income, even small financial hiccups could snowball into major crises. For instance, a temporary job loss might leave you unable to make your monthly payments, risking foreclosure. Then there is the inability to budget long-term. Owning a home requires a long-term financial planning. Without a predictable income, it's challenging to create a realistic budget for home expenses, repairs, or improvements. So if your income fluctuates or you're in between jobs, you may be wise to wait until your financial situation stabilizes before committing to home ownership. Number 2 is insufficient savings. Buying a home requires significant upfront costs beyond just the down payment. A lack of savings is a strong indicator that you may not be ready. Here are the key areas where savings are essential. First, you have the down payment. While most mortgage companies allow little or no down payment options, putting at least 20% down can save you thousands over time by avoiding private mortgage insurance, otherwise known as PMI, and reducing your monthly payment. Then there's closing costs. These typically range from 2 to 3% of the home's purchase price and include fees for appraisals, inspections, escrow and title fees, and legal services. Then there's an emergency fund. Homeownership comes with unexpected expenses, such as a broken HVAC or roof repair. Without a cushion, you might have to rely on high-interest loans or even credit cards. Then there's moving costs. Transitioning into a new home can involve hiring movers, purchasing furniture, and other unexpected expenses. So if you're living paycheck to paycheck or have no safety net, it's better to delay buying a home until you've accumulated adequate savings. Number 3 is high levels of debt. Now, debt can significantly hinder your ability to afford a home, whether it's student loans, credit card balances, car payments, or personal loans. High debt levels are a warning sign that you should reconsider purchasing a home. Here's why. You have your debt to income ratio, otherwise known as DTI. Mortgage lenders evaluate your DTI to determine your borrowing capacity. A high DTI, which is considered anything above 43%, signals that you are over-leveraged, making you less likely to qualify for a loan. Then there's reduced purchasing power. Carrying significant debt reduces the amount of money you can allocate towards a mortgage. It can limit the price range of homes you can afford. Then there's financial vulnerability. Adding a mortgage payment to an already strained financial situation can lead to defaulting on loans, damage to your credit score, or even bankruptcy. If a large portion of your monthly income goes towards debt payments, focus on reducing those obligations before considering homeownership is definitely the optimal path forward. Number 4 is uncertainty about your long-term plans. Buying a home is typically a long-term commitment. If you're unsure about your future plans, it might not be the right time to purchase. A few examples of situations that suggest renting might be a better option include career instability or mobility. If you're considering a career change, relocating for work, or pursuing further education, buying a home could tie you down and make moving more complicated. Then there is lifestyle changes. Major events such as getting married, having children, or transitioning to retirement might alter your housing needs. Buying before you're sure about your future lifestyle could lead to regret. Then there's the Las Vegas market conditions. If you buy a home and need to sell within a few years, you may lose money due to transaction costs or market fluctuations. The good news, however, is the Las Vegas housing market is forecasted to appreciate anywhere between 3 to 5% per year for at least the next 5 years, which is good news for homeowners. Home ownership typically benefits those who plan to stay in one place for at least 5 years. So if your plans are in flux, renting allows you greater flexibility and less financial risk than buying. Number 5 is poor credit score. Your credit score plays a critical role in determining the interest rate and terms of your mortgage. A poor score not only limits your borrowing options, but also increases the overall cost of homeownership. Here's how. A lower credit score results in higher interest rates, meaning you'll pay significantly more over the life of the loan. For example, a 1% difference in interest on a 30-year mortgage can lead or add to tens of thousands of dollars to your total cost. Then there are limited loan options. Many lenders have minimum credit score requirements, typically 620 for conventional loans. Borrowers with lower credit scores may only qualify for subprime loans with unfavorable terms. Then there is the financial strain. Higher monthly payments due to poor credit can leave you less room in your budget for savings, maintenance, and other expenses. So if your credit score is below 700, considering taking steps to improve it before applying for a mortgage. Paying down debt, disputing inaccuracies on your credit report, and avoiding new credit inquiries can help boost your score over time. Number 6 is you haven't researched the Las Vegas housing market. The Las Vegas real estate market can vary significantly depending on location, timing, and economic factors. Jumping into home ownership without understanding the market can lead to overpaying or buying a property that doesn't meet your needs. Signs of unpreparedness include you don't know the average home prices in your desired area, you haven't explored mortgage options or interest rates, and you're unaware of the local property taxes or homeowners association fees. A lack of research can result in poor decision making. For example, buying in a seller's market might leave you with limited options and higher prices, while a buyer's market could offer better deals and negotiating power. The good news is if you select the right agent to work with, which I happen to know one in particular very well, they will equip you with the necessary market data and trends to guide you in making the best decision for you and your family. And lastly, number 7, which is very important, and that is buying without pressure or FOMO, fear of missing out. Buying a home is a deeply personal decision that should align with your financial goals and life plans, not be influenced by external pressures. If you're feeling rushed or compelled to buy for the wrong reasons, it's a sign to pause and reassess. Common pressures include you've got social expectations. friends or family may unintentionally pressure you to buy because it's the right time or because renting is throwing money away. However, what's right for others may not suit your current situation. Then there's the market conditions. In competitive housing markets like Las Vegas, buyers often rush to purchase out of fear that prices will continue rising. While the timing the market is tempting, buying hastily can lead to poor decisions, such as overextending your budget or settling for a home that doesn't meet your needs. Then there's the emotional impulse. The excitement of owning a home or falling in love with a specific property can cloud judgment. It's essential to approach a decision with logic and clear understanding of your financial readiness. If external factors or emotions are driving your decision, take a step back to evaluate whether you're truly ready to buy a home. Making a purchase before you're prepared can lead to long-term regrets and financial strain. Well, this gives you a good overview of the 7 signs that point to you may not be ready to purchase a home. While the idea of owning a home can be exciting, it's essential to ensure you're financially and emotionally prepared for the responsibility. A stable income, sufficient savings, manageable debt, clear long-term plans, and a strong credit score are all key indicators that you're ready to take the leap. If you're missing one or more of these elements, don't rush the process. Instead, use the time to strengthen your financial position and gain clarity on your goals. By doing so, you'll set yourself up for a more successful and stress-free homeownership experience. I hope you enjoyed this video and found it informative, so please like and share it. Please also subscribe below and comment if you have any questions or found this video helpful. Also, if you haven't already, be sure to check out our other videos on Las Vegas and the surrounding areas so you can continue to get a realistic sense of what it would feel like to live here in the Las Vegas Valley. So whether you're moving in 9 days or 9 months, give us a call, shoot us a text, send us an email, or even schedule a Zoom appointment here in the description below. We can't wait to help you make a smooth and a stress-free move to Las Vegas. So, until next time, we hope to show you around town very, very soon.